Michael, to me, the situation's pretty clear, right? Demand is outpacing supply, and CoreWeave's trying to scale as fast as it can to redress that balance. Could you give specifics on what that looks like, on how you're trying to scale your offering, both in terms of literal infrastructure build out, but also keeping pace with technology?
Yeah, so thank you for giving me the opportunity to speak with you. We just had our quarterly earnings call yesterday, and we reported an absolutely fantastic quarter for the company. I'm really proud of the entire organization and what we've accomplished. What you're speaking to is really kind of toggling to the systemic structural shortage that exists within the computing infrastructure of the world, and it is incredibly acute within the parallelized computing component of the broader space. It really has to do with the incredible traction that we're seeing within artificial intelligence, both for training new models, but also for the incredible ramp of inference that is occurring across the space. We are working incredibly hard with our partners up and down the supply chain to deliver and address the bottlenecks that come up in delivering infrastructure. And the way I talk about it internally with the company is, delivering 97% of a supercomputer doesn't do anything, right? Like, you have to deliver the whole thing. It's got to be a comprehensive solution. It's got to be delivered in its entirety for it to be useful. We are working incredibly hard right now. The key bottleneck really is the powered shell. And so that's, when you think about that, that's really the building, the cooling, the distribution of electricity. It's the physical bending of the steel to deliver the electrons to the supercomputers.
Right.
What will happen is that will get, kind of addressed for a few months, and then we'll be in a position where we will be with our backs up against the wall because there will be a silicon shortage, or there'll be a networking shortage. And that's really what we've seen wave after wave for the past 3 years within this space.
Well, then there's a lot of focus on CapEx, but I think that what the investor base is trying to understand is something that came up the hyperscalers earlier in the year, which is higher CapEx to address all the things you want to do, or does it just reflect that right now in supply chain, and you mentioned scarcity on GPU, there is just more cost in doing business for you guys right now?
I don't think it's an incremental cost issue on the next unit, the marginal unit of compute. I think what you're seeing is the systemic imbalance right now. The disequilibrium is driving massive scaling up of a planetary scale build out. And yes, there is some degree of challenges within specific components of the build out, but that's not what's driving the massive wave of CapEx that's impacting the sector. This is a planetary scale build out of computing infrastructure that will be used for the next 50 years to support artificial intelligence that will drive technology forward.
Michael, is that demand right now largely inference, or are you still largely seeing training demand?
Yeah, so one of the things that we're incredibly excited about within our company, one of the things I think the industry at large is incredibly excited about, is that we continue to see massive demand for training, right? Like that hasn't abated in any way. But what you're seeing is a continual cranking up of the demand for inference. And we see it within our portfolio of data centers, because when the compute is being dispatched, if it's being used for training, you'll see a step function, right? The training job begins, it runs, it steps down when it's over. But when you're viewing the compute being used for inference, what you see is a much more gradual increase and decrease as you move through the day, as people begin to come on and off their demands for artificial intelligence. And we haven't lost demand for training new models, but we have been incredibly pressed across the industry for compute for additional inference capacity.
What's the percentage split inference training for you?
The last time I looked, and it does move a lot, it was over 50% for inference at this point.
Okay, that's an interesting change because I think I ask you that quite regularly, and it seems to be at that mark. The thing that I've been thinking about a lot recently is the aging GPU. You know, basically NVIDIA commits to that change, right, on an annual basis. In the context of the demand picture you just outlined, but also what you're trying to do in scaling, how do you keep up with the aging GPU scenario?
Yeah, look, what we are seeing in our infrastructure is a consistent movement of the newest iterations of architecture that come out of NVIDIA being used to drive the most bleeding edge training infrastructure jobs required. And what happens is the prior generation begins to pick up the load on inference. And you see it kind of passing from one generation to the next generation to the next generation. We are not seeing meaningful declines in the H100 demand, which is the prior generation to the Grace Blackwell that is the cutting edge right now. We're also not seeing any real decrease in demand for the Ampere series, which is even prior to the H100s. There is broad-based inference demand absorbing that compute. It's being picked up into term contracts by many of the same players that are looking to support the ever-growing demands of inference.
Are you diversifying the business, Michael, away from just OpenAI and Microsoft?
Yeah, look, it's a huge focus for our organization. We've made tremendous progress. I talked a little bit about it in the earnings last night as we take on new clients, as we basically penetrate additional layers of the enterprise space. I talked a little bit about how we're not only seeing diversification of clients, but we're also seeing green shoots in new parts of the economy that are beginning to integrate artificial intelligence. And I focused a little bit on two sectors, and it's just two sectors that we chose. The one was the VFX space, where we saw companies like Moon Valley come in and begin to integrate artificial intelligence into visual effects. It's an incredible growth sector for us. We're seeing a lot of new companies begin to ramp there. We're also seeing real developments begin to occur in the life sciences portion of the market. There are, I spoke about Hippocratic AI, and those are wonderful developments. It really is speaking to a resilient broadening of artificial intelligence as it penetrates the economy.
Michael, we've been studying really closely how xAI went about building Colossus and what Meta plans to do with its next-gen capacity. They very much kind of go it alone. And I wondered if you talk a little bit about the opportunity or maybe lack of opportunity you see to work with those two names.
Yeah, so Meta's a client of ours, and we are, we work with them very well. We think there's lots of opportunities for us to expand our relationship with them and to broaden their use of our computational infrastructure. We think that the work that X is doing at their sites is incredibly impressive. But we believe that ultimately, when you're dealing with the scaling exercise that looks like what is going on within AI, you're always going to wind up using partners. It's just the nature of it. You need to build so much, so fast, so broadly. We're very confident that there's really great opportunities for us to continue to work with a broad set of companies. I spoke a little bit about this on the earnings also, which was, in the last 8 weeks, we've seen two of our hyperscaler clients come back and execute extensions and broaden their contractual relationship with us. It's very exciting, and it is representative of a space that's broadly trying to address this systemic imbalance, of which CoreWeave is a wonderful solution. We deliver, best-in-class technology, best-in-class software stack to be able to allow different users across the space to really take advantage of the infrastructure that we're building.
Michael, there's demand to understand better the NeoCloud business model. And I ask you to explain it through the lens of what happens if GPU prices go down and the training portion demand drops. Because you explained to me earlier that actually you see the inference growth, that's what's pulling away. But in that opposite scenario, training demand drops, but also the GPU price comes down. What do you do then?
Yeah, so it's very important to understand that we have structured this business around long-term contracts with counterparties, right? And so we have built our business around going out, selling massive scale compute, going back to the market, borrowing the money to build that compute that's already sold, right? And so we really have insulated our business from the short-term variance that occurs within the spot price for computing. It was a conscious decision that we made. It was a way of us building contracts that could be underwritten by the most sophisticated lenders in the world. We've made tremendous progress on one of the most important things that we identify within the business model, which is driving down our cost of capital. In our last delayed draw facility, you saw a 900 basis points decrease from the last facility to this facility for non-investment grade clients. That is an overwhelming, massive increase to the economics of our company. It's just an incredible step, and so much progress has been made there. As far as the decrease in training, we don't see a scenario where you decrease training. We see a scenario where you increase inference, right? And it's really important to understand that we expect, and we have seen, iterative training continue nonstop across the space. And so we really just, we believe that training is going to be one of the fundamental building blocks. On a relative basis, it will become smaller because inference will dominate the space. And we are really well positioned across our fleet of 32 data centers to supply inference capacity in a low latency configuration to consumers of compute who are driving product into the market.